some of those DSCR options that I was just showing allow us to calculate using vacation or short-term rental income. So you see hundreds of different variations of DSCR. Not all of them allow this. And most importantly, not all of them allow us to use estimated short-term rental income, which I'm sure Jose is going to discuss. So great options, very popular requests these days. And specifically our DSCR options specialize in utilizing this type of income. It is a little bit tricky, so please get with our team members to find the best options. And we'll have Jose go through a few of the best options we have in general. And again, just meet with our team members to get your specific deal in place, and we can find the best home for that deal. So Jose, if you're ready, let's check out some real examples.
Good morning, everybody. Thank you for joining us for Daily Rate Slide with the Mortgage Calculator. Great to be with you today. So, short-term rentals is a great sector. As you know, it's growing exponentially. It's probably the hottest sector in the DSCR realm. There's a lot of activity. Rents, long-term rents are going up, but the short-term rent use is also greatly increasing, especially after the pandemic, where people have decided that they really like more privacy in their vacation rental stay, right? They don't want to be necessarily locked up with 500 other people staying in a building when they can just go and stay in their nice single family home, townhouse, or have the privacy of a condo with kitchen and their own private parking and all of the different conveniences that we know that we love when we use short-term rentals on our vacations. The key here is knowing how to read the guidelines and apply it to the objective of the borrower. The DSCR product is the product with the most flexibility in their guidelines regarding income, which is the preferred method to help the customer reach the objective when there is a short-term rental property or when the intended use will be short-term rentals. Now, this is a lot easier when it's a purchase rather than when it is a refinance, because when it's a refinance, they are already operating the property and it's pretty much set what the property is being used for. When it is a purchase, we have more flexibility, right? So let me get into some examples and I'll explain how these flexibilities work on my first example, right? Because my first example is the unicorn, the 85% LTV DSCR purchase. Now, the key to this one here is most prefer 1.25 DSCR or above. But the key here is if the property covers the debt service coverage ratio with long term rental, then nothing else is needed to be done, right? You don't have to stipulate this is going to be a short term rental or anything of that matter because it is a purchase and it is yet to be determined what is going to be done because the guidelines allow us to use market rent from a 1007 to qualify the borrower. No need to provide leases, no issues if the property is vacant. So the key here is first analyze the long-term rent and see if the long-term rent helps meet the objective. And if it does, then smooth sailing. And in this scenario here, we have great options at an 85% LTV with 8.5% being our lowest cost option and 7.875% being our lowest rate option. So this would be best case scenario, right? The planets align, everything works, beautiful. However, as we know, sometimes that's not always the case. And then we definitely have options because what you're going to find in most short term rental type properties is that they're going to be marketed as a short term rental type property. If they're currently doing short term rentals, they're obviously getting good revenues, higher than long term rental revenues, and the price will be adjusted accordingly. And what ends up happening in some of these cases at the elevated sales prices, the property may not cash flow where you need it to cash flow as a long term rental, but that is where these additional solutions that we have, like AirDNA. Those of you that may not be aware what AirDNA is, it is a database of short term rental properties, right? Current active short term rental properties. So then you would search for comparable rental properties in that database, the same as you're going to search in any other database based on proximity to the subject, based on similar style, right? Three, like number of bedrooms, number of bathrooms, type of property, the age of the property. You usually not going to compare, for example, a brand new property with a property that is not brand new and has not been remodeled. And also, you definitely have to pay attention to the bedroom count. And like I mentioned, proximity, super important. Just because it's short term rentals, AirDNA, doesn't mean that you can grab comps from 6, 7 miles away. That's just not going to work. So, but then again, if you do have those comps, then this is the way to go. Now, the key to note is that there is not, I repeat, this is super important, there is not an LTV reduction with this product. The only catch is that your DSCR has to be 1.5 or above. Now, let me state, if you have a short term rental property that the AirDNA does not cash flow at 1.5 or above, then maybe it's not a good short term rental property. Now, the other scenario you could have is that there are no AirDNA comps, and we'll cover that situation in our next slide. But here we're looking at great options. I mean, totally hitting it out of the park. 8% with a lender credit. Now, these are amazing rates I'm looking at here. And our lowest rate option 6.875. So just chew on that a little bit, right? Short-term rental property, AirDNA, no LTV reductions, 80% LTV, and you can buy it down all the way to 6.875%. So that's pretty amazing. So,
It's a DSCR loan, no income,
yes,
no employment, no documentation on.
absolutely. No tax returns, no 4506s. Not just do you not have to worry about the numbers not adding up, but you also don't have to worry about the delays that may be caused waiting for that tax transcript. So now this option is if, again, this is an AirDNA option for purchase. This one is for if the DSCR is below 1.5, but at least 1.25, then you can do 75% LTV. Now, you ask, why would you worry about this option if you have a no ratio DSCR option at a, or low ratio, should I say, DSCR option at a 75%, the low ratio going 0.75 to 0.99? Well, the reason is look at the rates. Look at that, 7.75 with a lender credit. And you can buy that down all the way to 6.75%. So you'll see when I do show the low and no ratio options now, there is a substantial difference. So AirDNA, amazing option. Most of the AMCs out there now are aware of short-term rental appraisals and aware of AirDNA. However, be very careful when you do order that short-term rental property appraisal. Confirm and reconfirm that the selected AMC will be able to provide the needed report you need with the AirDNA. Now, there are a couple of AMCs out there that specialize in this. They themselves have access to the AirDNA database. So if there's any issues with the appraiser not being able to obtain, they provide the comps to the appraiser. So very, very important that you make sure that you're partnering with the right AMC for your short-term rental properties. Now, I mentioned what happens if you do not have air DNA comps in the area. Now, that can happen, right? I mean, it may not necessarily be a short term rental area, but if this is a purchase, the seller is currently doing short term rental on the property, and the seller can provide the last 12 months of revenue reports from the platforms that he has the property listed, like Airbnb, VRBO, and HomeAway, Booking.com, to name several of the popular platforms. Then the borrower can apply and present those 12 months of revenue reports to the appraiser to compile them on the 1007, right? You will usually be given up to a certain percentage of those short-term rental revenue reports, but there's different ways that this is handled by the different guidelines, right? So it's very important. Some of them say that if you present a regular long-term rental 1007 in the appraisal, that then they limit you to anywhere from 115 to 125%, whereas others say don't give me a long-term rental 1007, just use the short-term rental revenue reports on the 1007, and then no limit to the amount that you can use from the short-term rental revenue reports. Now they do add a management fee hit on those, but they don't limit it. Like in some cases, they're limiting you to from 115 to 125%. The only thing they're going to do is give you the haircut based on the fact that you're using short-term rental revenue reports. So here, again, for our purchase, 80%, only a 1.0 or above DSCR needed here. You're looking still amazing rates, 7.99% lowest cost option, and you can buy that down to 7.25%. And now I mentioned about low ratio and no ratio. Okay, the low ratio is our DSCR from a 0.75 to a 0.99. Again, maximum LTV for this program is 75% for purchases. Now, again, this is where you would use when the seller is not doing short-term rental on the property, so short-term rental revenue reports are not available, and also where air DNA is not available, and where the property is cash flowing below 1.0. If it was 1.0 or above, you could still do our regular DSCR programs with this short-term rental property, but in this case right now, we're analyzing the low ratio option. Pretty good rate still here because you're looking at 8.75 as your lowest cost option, and you can buy that down all the way to 7.25%. So very good option here still, even though remember this is 75% LTV and not 80. And now our no ratio option is when the DSCR is less than 0.75. Again, this is amazing for those trophy properties. The borrower knows they're going to kill it with the property, but there are no short-term rental revenue reports. There's no air DNA available. There's nothing, but they really want that property. They know they've done their market study. They know how it's going to work for them. Maybe they're already a short-term rental property operator. They have their action plan business model working for them. So again, here, no ratio, 9.875 is your lowest cost option, and you can buy that down to 7.75. So still not too shabby. And I wanted to show you our last option here. And actually, this is this is a cash out refi at a 70% on the no ratio. I forgot to mention that. This is a very important note. And our last option is using short-term rental revenue reports, 75% max LTV. Keep in mind, this is for owners, cash out refi, that have already been doing short term rentals and can provide the last 12 months of short term rental revenue report. The reason that the guidelines will ask for 12 months is because they want to have an accurate average taking into consideration seasonality, right? There's a lot of seasonality in short term rentals depending on the area, especially, like if you're a property that's in a ski resort type area, the rental revenue in July is going to be a lot different than the rental revenue you're going to get in December, January, February, and March, right? So that's why they ask for 12 months so that they can get the average, have it be more accurate. So here with our max LTV, 75% on this option, 7.99 is your lowest cost option, and 7.25 is your lowest rate option. And again, great options at 75% LTV for cash out refi.
All right. It looks like there's one question, rehab or refi option here. Not sure exactly what example you were at when that was asked.
Rehab would never be applicable on a DSCR, on these DSCR loans that we're talking about for purchases and refis. The rehab loans, we have multiple rehab loan options depending on if you're a primary or second home buyer or if you are an investor. The investors would typically be the fixed flip type loans, even though there is a conventional renovation purchase loan option for investors, but that is a full doc option, whereas most of our investors really want a short term bridge loan for their renovation purchase, which will allow them to either sell the property if they choose to, or they can refinance out of that loan into the end loan. And those fixed flip loans do not take into consideration the personal income of the borrower, but the profit in the deal.
All right. I don't see any other questions, so we'll go ahead and wrap it up.